Nevertheless, Kunj Bansal is with us. Samit is also now joining us. Samit, let's start with the markets first. What will be your perspective after the recovery that we have seen now? At what closing level would you say that markets trend has changed, or how would you look at things going ahead after this sharp 150 point recovery from the low?
In the initial part also when we discussed about indices, we are of the opinion that market is trading at important levels and today's low, coincides around 17,000, which is sacrosanct support for Nifty, and for Bank Nifty also 37,300, 37,000. So this recovery has come from the important levels, and now we would look for a follow. Overall, see, the trend has been positive till the time Nifty remains above 16,800, Bank Nifty above 36,500. And now, since last 3 days, we have seen some corrective move. So if Nifty has to regain strength, it has to surpass 17,350, 17,500 zone. If that happens, then we could see, upward trajectory continuing probably towards 17,800, 17,900 in the following week. And for Bank Nifty also, it has held its important support level of 37,300. So from here on, a follow-up move above 38,500 would trigger a good move in most of the banking counters. And in that case, we could see Bank Nifty heading towards 39,500.
Do you think the correction has been unhealthy? Some of the mid-cap names have really fallen down 15-20% from their highs, at least, the ones that have some predictability in earnings as well. You think it's time to buy, or just wait for this thing around the Fed, FII selling to just settle down and then probably take a call?
Yeah, so the answer to both these parts of the question can't be together, so I'll try and answer them separately. One, yes, correction has been healthy. In fact, today as we stand, we are in almost 4 months of correction come range bound movement of the market. So just to put some numbers in perspective, it was somewhere in mid, I think 18th October when we had peaked Nifty. And from there, as I was saying, it's 4 months that we have been in correction. From 18,500 high of Nifty went down to 16,000 in between, currently at about 17,300. In this whole process, while Nifty, as visibly we can see as of today, is hardly showing about 7-8% correction, a lot of stocks have corrected sharply. In fact, some of the high quality large cap and mid cap as well are almost 1 year ago level. So that's the kind of erosion that we have seen. From the peak, they are down 20, 25, 30%. Now, when it comes to investing or buying strategy, it has to be obviously different for traders as well as for medium term investors. For traders, this kind of movement, I think, is a godsend opportunity, wherein they keep seeing the ranges in indices as well as in the stocks of their choice, and they can accordingly trade. For mid cap investors, yes, it is a good buying opportunity, but I wouldn't advise them to buy completely. I think they should space out their buying at current level, with the result season now coming largely towards a close, but at the same time oil hovering about $90, seemingly moving like towards $100. Probably 30-40% investing at this point of time could be a good idea. Doesn't matter even if market goes up and one has to invest the balance at a higher level. At least that gives the conviction and confidence that okay, the market has regained its strength. So I think 30-40% investing is certainly advised at this level.
Hi Kunj, good afternoon. Anisha this side. Well, yes, the recovery that we have seen in the last few minutes has been single-handedly done by Reliance itself, because that one is doing the heavy lifting, up around 1.7% on that one. We already got a technical check from Nuresh on that particular counter. But Kunj, do you have a view on Reliance? And given the crude that you pointed out is now moving towards $100 per barrel, any approach towards the upstream company or marketing companies, etc.?
Yeah, so putting these two together, one, of course, my view on Reliance wouldn't be short term. Short term view obviously will come from technical. From the fundamental point of view, given the way the events are likely to pan out over whatever next time frame we take, 1 year, 2 year, wherein we could see one or two IPOs of the subsidiaries coming in, let's say Reliance Jio or Reliance Retail. Along with that, and or without that, we can again see the round of some divestment in the subsidiaries coming in, some private equity investments or some stake sale coming in, that will be there. Business continues to improve. We saw the December quarter number, which were quite handsome by Reliance, almost all across the businesses. So and given the way the stock has corrected at about 10% from the peak of the market as well as peak of the individual stock, for medium term investor, my view is positive. It certainly makes sense to invest at the current level going forward. Extending that logic to the other oil and gas companies probably doesn't make sense. We have seen that almost all the OMCs, the Indian Oil, BPCL, though indeed reported good growth in top line, but the same was not reflected in bottom line. And the reasons were multiple. In some cases, it was inventory impact. In some cases, it was the margin compression, and something like that could continue over there. So I don't think that is a sector or a space for investing for medium term investor. They should stay away from that, while Reliance obviously looks positive.
Reliance looks positive, but other than that, nothing looking attractive as far as that space is concerned. Samit, but we already spoke about the Adani Group stocks, but I also wanted to talk to you about the Tata Group stocks because they are coming under a bit of pressure. Tata Power, of course, reports its numbers tomorrow. But apart from that, TCS is down today, given we saw that downgrade coming in from JP Morgan. We have Tata Consumers also a bit sluggish in trade. What are the near-term levels that you are looking at for all of these Tata Group stocks?
Well, over the past 1.5 years, so it's a phase of consolidation for all of them. Specifically, if we talk about TCS overall, if you see Nifty IT has been struggling since last 3 to 4 weeks, and TCS being one of the leaders, it has already corrected from the high levels of 4,000, but now it seems that around 3,600, 3,650, this stock has managed to find strong support. So we would expect some, more price-wise, we would expect a more time-wise correction in this particular counter, because price-wise correction is already done more than 10%. So now the stock is likely to consolidate, wherein the levels to watch out for would be around 3,900 to 4,000 on the higher side, and as long as it holds 3,600, one should start accumulating in a staggered manner. Apart from this, we have been closely tracking Tata Steel. Overall, if you see, metal, has been buzzing since last 3 4 days, and it has been bucking the trend. It has not participated in the correction that we have seen in the broader market in last 3 days. So Tata Steel is poised for a good move. So 1250 is the level to watch out for as far as Tata Steel is concerned. And once this stock managed to surpass 1250, then we would see a resumption of higher degree uptrend. The stock would come out of its recent congestion zone, and then 1320, 1350, these are the levels to watch out for Tata Steel.
Just checking in on the Nifty Mid-Cap Index, Tata Power down about 6.5%. There's Indiabulls Housing, Gujarat Gas, as well as BHEL that are on the back foot, along with something like an Aarti Industries, while Bank of Baroda is holding tall, Pfizer in the green, SRF, something like TVS Motor, as well as ICICI Securities and Chola Investment are a bit upbeat in today's trading session. Kunj, just wanted to know what your reading is into some of these PSU stocks, and how you expect them to trend going forward?
So PSU space surprisingly has been an outperformer, not only now for about close to a year and or rather 15 months or so, starting November, December 2020. It has also been an outperformer in the last 4 months of volatility / market correction / range bound movement. Within PSUs, when I say this, this has come out more clearly in the PSU banking space, wherein we are continuing to see the outperformance coming in. The results have also been coming in, so they are also showing improving trends in terms of multiple parameters. In some cases, either in terms of asset quality, in some cases business growth, in some cases its profitability. So that has been there. Similarly, extending that in the non-banking PSU space, also we have seen the outperformance. In some cases supported by the quarterly numbers, and in some cases not necessarily supported by quarterly numbers, but probably because of the valuation gap that had become too huge and the buying by institution as well as non-institution. So that has been a surprising space in this whole market correction. Will it continue to outperform? As of now, it looks like yes, but we have to wait and watch. But as of now, it looks like they will outperform.
Okay, fair enough. Meantime, let's get in some chart checks going then. And TVS Motor and Mannappuram Finance, Sameet.
Yeah, as far as TVS Motors is concerned, overall, if you see, two-wheeler space has went into a correction mode, and TVS Motor has managed to hold its important support. Meanwhile, overall, if you see within this three stocks, Hero Motor and Bajaj Auto has been our preferred picks, but the price-wise, TVS Motor looks quite sturdy. 680 is the level to watch out for, and once it breaks above 680, so on daily chart we could see completion of its recent price as well as time-wise corrective phase, and then stock can head towards 720. So we would rather wait for a breakout to happen beyond 680, and then one can enter for a target of 720 by keeping a stop somewhere around 640. Apart from this, Mannappuram Finance is the one stock. It is holding its important support level of 145, and today we are seeing a good traction in this counter. Other disclosure, we have recommended this to our clients through options, so one can go long at current level, and we would expect this stock surpassing its recent swing high of 163 in probably next couple of days, and then can head towards 170. So one can trade with a positive bias as far as Mannappuram Finance is concerned, and today's low of 154 should now act as a strong support, which can be also treated as a stop loss level.
After the recent correction, in some of these, so-called e-commerce companies where valuations were very high when they got listed, and probably they may be still high now, but would you be tempted to buy any of these new recent listings, or, how should one look at this sort of a correction in these names?
So is that question to me?
Yeah, Kunj.
Yeah. So to arrive at an answer to your question, it's a very relevant question in today's market context, of course. We need to slightly visualize going forward how things shape up, and how I see things shaping up, that this whole space of IT slash digital slash e-com slash fintech kind of companies getting divided into three sub segments. So one will be, of course, traditional IT services company, which have continued to report excellent profit numbers, growth, cash flows, etc., and have been outperforming, will continue to outperform. The second will be these relatively new listings, which will get divided again into two segments. So one segment will be the stocks where there is a profitability along with growth. Of course, valuation could be high, or an expectation of profitability in a foreseeable future. And the third subsegment will be of all these new listings from the digital space, wherein neither is there an existing profitability, nor is there a visibility of profitability in the near future. So I think that's this third segment is where the problem will come, which is where we might continue to see the underperformance of the stock. And to answer your question, wouldn't make an investment case for me, wouldn't come into a buying space for me. The first two subsegments, the first one, the traditional IT services companies, as well as the second one of the digital stocks, wherein there is a profitability or expectation of profitability, will certainly come into buying list at some point of time. How one will have to restrict the risk in such a scenario is to keep a limited weightage of the portfolio to these stocks, because assuming that the expected profitability doesn't come in the sector, or the stocks continue to underperform, then one has to protect the portfolio from the underperformance, but at the same time take an exposure, because if the profitability comes in, valuations are of course high, but given the high growth, the valuations will continue to remain high. So I think that's how I will approach this whole subsegment.